Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list, questions floated to me from across the interwebs, in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribbled down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. And now for this week's question. Are premiums paid on personal life insurance policies tax deductible? What about policy loans? So in most cases, no, you cannot deduct life insurance premiums. So the IRS considers premiums on a life insurance policy a personal expense and therefore not tax deductible. That's under current tax laws as of 2025. However, there are some situations where premiums paid by a corporation or possibly a trust are deductible. This can have some odd tax consequences on the back end, however, but it theoretically is possible. Most of the time, I recommend folks own a life insurance policy personally, unless their long-term plan includes setting up a trust. And even then, the trust would own the policy and then make the premium payments. Again, it wouldn't be personally owned. It would be trust owned or corporate owned in the case of a corporation. In those cases, premiums may or may not be deductible depending on the purpose of the trust. Generally, when premiums are deductible, it means that the IRS will tax distributions. So you can't have both. So you can't say, well, I want to deduct premiums going in, but then distributions, when you talk about getting cash value back out of the policy, I want those tax-free also. The IRS doesn't allow that. It's either deducting the contributions or you get the distributions on the way out are untaxed, as long as you're following the rules concerning distributions up to cost basis. And then if you want additional deferred or some people consider it to be tax-free, but it's technically just tax deferred on the loans, you would use policy loans to get, those tax-free distributions. And when premiums are not deductible, the distributions will be tax-free up to basis, and which means the amount that's tax-free up to the amount that you put into the policy, that you take that back out first. Policy loans are generally tax-free also, as long as the policy is not a MEC and modified endowment contract, and as long as premiums were not tax deductible. Now, kind of a related question, a follow-up question on this one was, can I deduct interest on policy loans? And what about a loan used to buy life insurance? So the policy loan question I kind of already answered, so I'll cover it briefly, but I wanted to include this one just because it included an interesting question on a loan used to buy insurance. So in some cases, yes, in terms of the policy loans I had mentioned before, but the deductibility is quite limited. Deductibility of the policy loan interest is going to be limited to loans used for business purposes, and then even then, only when the policy covers a key employee of a business. And then even then, there are limits to the amount of the loan interest that can be deducted. And this amount's going to change potentially over time. But the last that I looked at, it doesn't come up very often, but the last I checked on this, generally it was up to $50,000 of policy debt or loan interest. And then any loan interest that is paid must follow a pretty strict paper trail to prove that it was used for certain business activity. So at some point, the interest income will be included on a tax return somewhere. So while it's possible, most people can't really make good use of this obscure area of the tax law. It is, again, theoretically possible. And some people have discussed, whether it would make sense to spread loans out across multiple policies and so on and so forth. Again, the IRS is going to change the rules when people are trying to, what they perceive to be gaming the system. But so theoretically, yes, it's possible to kind of arrange things to get a deduction on loan interest if it's used for business purposes. There are limits to that, and those things can change in the future, so just be aware of that. All right, that's it for this week's question. It was a great one. I'll see you here next week with another life insurance question. Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, monegeniix.com, and sign up for my daily email list.